Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
So guys, are we on? Yes, we are. Okay, so hello traders, and welcome back to London Open weekly analysis live session. Kicking off the trading week of September 1st to September 5th, 2025. Happy Labor Day if you're in the US or Canada, which means thinner volumes today. Last week, August 25th to 29th, was a mixed bag. We had indices like the S&P 500 touching 6,500 points early, but it drifted lower after the July PCE inflation data came in. It came in line with the expectations, keeping Fed cut hopes alive but sparking some profit taking. Equities, which is stocks, slipped overall. Gold surged on safe haven flows. We saw gold approaching a new all-time high. I think we're now $11 away from an all-time high. Crypto pulled back heavily after last week's rally, and the DXY weakened because of rate cut bets. Now the odds are over 87% for a 25 basis point move in September. All right, so what else did we have? Yeah, of course. We had Nvidia's earnings. It added to the AI hype, but couldn't prevent broader dips. Geopolitics remains steady with no major Ukraine shifts. Nothing major happened there. But tariff talks linger. Now we have the American court ruling out Trump's tariff policy. They're basically saying that he's not allowed, or he doesn't have the authority to throw tariffs the way he's doing. They ruled out his tariff policy. So let's see how that affects the market. But as I told you, today is Labor Day in US and Canada. So we won't see the American market reaction on that piece of news. The overall vibe is cautious, but also optimistic. Dovish Fed could lift risk assets, like stocks and crypto, but sticky data might pressure them. Now, as traders, we need to focus on volume around job numbers. This week we have the NFP, which is a very important number. We'll get to that in a bit. So we need to use stops and don't chase prices without levels. Okay. So Labor Day holidays today mean a quiet start to the week, but the week ramps up with manufacturing PMIs, job openings, ADP, and Friday's big NFP jobs report, which is key for the Fed path. Okay, guys, the non-farm payroll that I just mentioned, the non-farm payrolls is definitely among the top 3 high-impact news ever. And this number gets released on the first Friday of each month. So we need to pay attention to it because the volatility is crazy during this news release or this number release. So now let's move to the high-impact news calendar. Let's start. Okay, so let me share my screen 1 second. Okay. Let me see. Oh no. How do I? 1 second. Okay, so can you guys see this now? 1 second, let me put it in. One second, please. Something is off. No, I don't like this. Okay, so again, okay, we have this. So guys, just to check, can you hear me now? All right, so let's start with the weekly high impact news calendar. Okay. So, as we said, Monday today, which is September 1st, 2025, we have holidays in US and Canada, which is the Labor Day in both countries. So the US markets will be closed. So we have thin liquidity and reduced volumes in USD assets in general, stocks and bonds. And also Canadian markets are closed, obviously. This impacts the Canadian dollar pairs. So in general, we have a lighter North American trading today. Let's move to Tuesday. I think we have quite a day on Tuesday. Okay, Tuesday, September 2nd. We have the euro inflation, which is CPI. We have the year-on-year CPI numbers coming from Europe. The previous was 2%, which is the target of the ECB, which is the central bank in Europe. The forecast is 1.9. It's missing from this calendar, but the forecast is 1.9, so they're expecting a lower reading on Tuesday. So if it comes in softer than expected, this could ease the ECB cuts, so they wouldn't need to cut rates unless there's like a slowdown in growth, which would weaken the euro. Of course, if it comes in hotter than expected, like the inflation comes in at 2.1%, 2.2%, or even 2%, this would boost the euro. Okay, then what do we have? We have the S&P Global Manufacturing PMI. Okay, so the previous number was 53.3, and the forecast is also 53.3. So that's for the USD factory health. Okay, so above 50 signals growth, supporting the USD, and below things industrials. The ISM manufacturing PMI, a very important number. This is the key manufacturing sentiment number. If it beats, it eases slowdown fears. If it beats expectations, I mean. If it misses, this will fuel the cut or the rate cut bets. Okay. Now we have it at 87%. We might see a higher expectation or a higher bet by the market that the rate cut will happen. Then what do we have? We have the ISM manufacturing prices. The previous number was 64.8, and the expected is 52.5. The forecast is 52.5. This number is mainly about input costs. So if it comes in lower, it hints cooling inflation, which is dovish for Fed. It means that it's more rate cut friendly. So that might also increase the bets of a rate cut in September. Okay. Now, what else do we have? That's it for Tuesday. Let's move to Wednesday. Okay, so Wednesday we have only one major or high impact news release, which is the JOLTS job openings. The previous number was 7.437, and the expected is 7.15. This number is basically the labor market vacancies. Okay, so a drop could signal cooling in the jobs market, but which would boost the cut odds and bonds, of course. So this is an important number, but this is the only one we have on Wednesday. And guys, by the way, all events are timed in Dubai time, which is GMT plus 4. What else do we have? Let's move to the next one. We have Thursday. Thursday is a busy day. All from the US, we have ADP non-farm employment, and we have initial jobless claims, S&P Global Services PMI, and we have ISM non-manufacturing PMI and ISM non-manufacturing prices. So the last two numbers are a follow-up of Tuesday's numbers. So let me break them down one by one. Let's start with the ADP non-farm employment change. So that's the private jobs preview. If it comes in strong, this would cause a hawkish tilt in the Fed's perspective, which would strengthen the USD, and a weak reading would aid stocks. So it would be bad for the USD if it comes in weaker, and this would boost the stock market. Then we have initial jobless claims. That's the weekly number that we're used to. It basically means that how many people are claiming that they're jobless. So rising claims would cool labor and is good for cut rates. So if this number comes in higher than expected, this would be good for a rate cut. Okay. Then we have the S&P Global Services PMI, which is okay. The previous number was 55.7, and the expected is 55.4. That's around the services sector. This number represents the services sector. So a strong reading would support growth, but we need to watch for overheat. So it needs to come in balance. If it comes in overheated, that could also harm the economy. Okay. Now let's move to the next one, which is okay. ISM non-manufacturing PMI for the month of August. That measures the non-manufacturing activity. So if it comes in above 50, let me read. The previous reading was 50.1, and the forecast is 50.5. All right. So if it comes in above 50, that's positive for the economy. Potentially would delay rate cuts. So that would mean hawkish Fed. If it comes in below 50, that would mean higher bets for a rate cut. Okay. Then we have ISM non-manufacturing prices. That's the services, the prices of services. So a decline would ease inflation worries, but the opposite is correct, of course. The previous reading was 69.9, and the expected reading or the forecast is 65. So if it comes as expected, which is a decline, this would ease inflation worries and would mean a dovish or a rate cut friendly environment for the Fed. All right. So we're done with Thursday. Yes, we're done with Thursday. Let's move to Friday. Friday is very important. We have three very important numbers. First one is average hourly earnings. The previous reading was 0.3, and the forecast is 0.3 as well. So this measures the wage growth. So how much did wages grow? Okay. So if it comes in hotter, that could mean inflationary pressure. So more inflation, hurting the cut bets. So we're betting as of now 87% that the Fed would cut rates in September's meeting, which is 16 days from now. But if it comes in softer, that would raise the bets above 87 even. Okay, then we have the non-farm payrolls, the one and only non-farm payrolls. Traders love this one. The previous reading was 73,000. The forecast is an increase at 78,000 forecast, and This means how many jobs were added. So if it beats expectations, this could strengthen the USD and the yields. If it misses, this could rally risk assets like stocks and crypto, because this could mean a dovish Fed and a boost to the rate cut bet. Okay. Then we have the unemployment rate, which is very important and like one of the most important, let's say, economic numbers that show the health of the economy. So the previous number was 4.2, and the forecast is 4.3. So if this number comes in higher, this signals weakness and would mean dovish Fed, because when Fed cuts rates, that would mean lower borrowing costs on companies, which could mean higher profits and possibilities to hire more people. But as long as rates are high, the companies have high expenses and costs, so they wouldn't hire. So this number goes up. So if it comes in higher, that could signal weakness in the economy and would mean the Fed has to cut rates. But a drop in that would ease the recession fears. Okay, so why we're talking about recessions here? Because there's only like one thing in common between all recessions across history, which is the unemployment rate. The unemployment rate, when it starts climbing up, this is the first sign of a recession. So if this number comes in higher, that would mean that we might be heading towards a recession. If not, that would ease the recession fears. Okay. Okay. So let's talk about some notes from the world. No major earnings this week, unlike the past week. We had Nvidia, but watch Fed speakers for cut clues. We need to watch the speakers from the Fed to hunt any cut clue. And guys, thin holiday trading today could amplify moves later. So be careful. If today was slow, it doesn't mean that the rest of the week will be slow. So this could actually amplify moves. All right. So be careful. Let me stop sharing this. Okay, so what else do we have? What risks do we have this week? Basically, 1 second, please. Okay, so the jobs data from Friday could flip the sentiment. So now we have an 87% chance of cutting rates in September's meeting. But if the jobs data comes in lower than expected, that could mean that the Fed shouldn't cut rates, or wouldn't be in a hurry to cut rates. So that would flip the sentiment. And we could see the 87% becoming 50%. All right. So let's just wrap up. The NFP, which is non-farm payroll, Friday is pivotal. So soft jobs lock in September cut. If it comes in softer, so that would mean that a September cut is very likely to happen, which would rally stocks, crypto. However, strong data might delay cuts, boosting the DXY. Now, about crypto, pullbacks last week, we saw Bitcoin is searching for a bottom right now, but Trump policies fuel long-term hype on crypto. So watch squeezes on macro dips. What else do we have? We have tariff and geopolitics. We said that the American court ruled out Trump's tariff policy. But in terms of geopolitics, there is no progress in Ukraine's file, which is no Ukraine escalation, which could stabilize the oil markets if positive hints emerge. Stagflation. Yeah, that's another thing. Stagflation concerns from tariffs and small business impacts is a thing now, because what does stagflation mean? It means that the prices stay high while the economy does not grow. So the economy stagnates while inflation stays high. So this is a very high risk for the Fed, because they would find themselves trapped between, if they lower rates, that would improve the growth, but would add more inflation. But if they increase rates, that would even harm the growth even more, which is the stagnant economy, or the already stagnant economy. What's it called? I forgot the word. Anyway, so if they raise interest rates, that would hurt the growth, and to control, they would raise interest rates to control inflation, but that would hurt the growth. So that's like a tricky place to be in for the Fed. So overall, position yourselves for jobs volume, soft data rallies everything. Sticky wages favor havens like gold. We saw how hot it was last week, and today I think we're almost hitting a new all-time high. 1 second. Yeah, we're $20, $22 away from an all-time high. So speaking of that, let's move to charts. Yeah. So before moving to the charts, does anyone have any question about what we just discussed? Let me check your questions. Hello, Sabaho, Ahlan. Good morning, hello everyone. How do changes in a country's interest rate typically affect the value of its currency relative to others? Okay, Loving Nature Guy is asking us, how do changes in a country's interest rate typically affect the value of its currency relative to others? And now, when you have a high interest rate on a currency, that would mean that it's more attractive for people to keep the money in the banks, to have deposits, the money circulation in the economy becomes slower because people keep their money deposits in the bank, and the cost of borrowing goes up, so people stop borrowing as much, so which would mean less supply of cash or money in the economy, which would mean if you have less supply and the same demand, the purchasing power of this currency goes up, which is exactly what inflation isn't. Inflation is the drop in the purchasing power of the currency. So if you increase interest rates, that currency becomes more attractive. Okay. What else do we have? What is NVIDIA earning, and is this something we can participate in? Okay. So basically, guys, that's a good question. What is NVIDIA earnings, and is it something we can participate in? Now, of course, you can participate in NVIDIA earnings, but NVIDIA earnings is basically, NVIDIA is a company. It's currently the biggest company on the planet. NVIDIA has the value of NVIDIA is almost as big as the Japanese stock market, which is the second largest stock market in the world. This company does business and produces stuff, mainly AI-driven products. So after each quarter, they post their earnings. They show their investors that we made this much money. So that day is very important for the markets and the stock market and the AI industry in general, because it could mean that if NVIDIA does well, everyone else does well. Excuse me 1 second, guys, please. Okay, so guys, okay, back to what we were saying. I had some. Yeah. So when NVIDIA comes in good, it means that the whole industry of AI is doing well. Why? Because NVIDIA almost provides services and products to everyone in the AI space. Okay. So when NVIDIA comes in hotter than expected, that would boost the markets. As you saw last week, we had all-time highs on Nasdaq and S&P. which is like the Nasdaq 100 has Nvidia in it, which is which has like 6.5% weight in the Nasdaq 100. So when something as big as Nvidia makes good progress or makes good money on earnings, that means that the Nasdaq 100 is it's normal for the Nasdaq 100 to make a new all-time high. Okay. Someone is asking, why is gold pumping? I hope I answered your question, but if you want me to explain more, please ask me, because your question is a little bit general. So I tried to sum it up. Okay. Why is gold pumping? We will talk about that when we move to the chart. Any reason? Yes, there is a reason, of course. Fundamentally, the reason is the geopolitical tension that is happening around the world. We still have no solution from Ukraine. We have no solution from the Middle East. Trump is facing the American court. China and the US and China are talking about, are still negotiating the soybean trade deal. So that could be the reason. There's a lot of uncertainty around, so that would be the reason fundamentally. But technically, we'll talk about it in a bit. Okay, so someone is saying, no, let's move to the charts. Okay, I agree. Let's move to the charts. Here are the charts. Let me share my screen. And here we go. All right. As always, we start with the dollar index. Okay, sorry about that. So let's move to the weekly chart of the dollar index. Okay, so last week we closed with a big rejection to the downside, just like the week before and the week before. So it's facing a hard time closing higher. So that could mean a continuation to the downside. Let's see the lower time frame, which is daily. Okay, so for me, this is the structure point that needs to be broken, so that if you can see here, I have a what's it called, an alert. I named it downtrend continuation. So if it breaks that level, I believe it will continue going lower, and I'm expecting it to move to almost 95, this area. Okay, let's remove this. This month, September, end of Q3. We'll talk about that in a bit. Okay, so let's go to the lower time frame, 8 hours. The same. We're still we have a tight range here. We need to break below 97 so that we can start talking about a downtrend continuation in the dollar index. 4 hours, also still the same. Nothing. We're still in a tight range between 98, or let's say 99. It's 98.75. Let's say 99 and 97. We need to break above or below this range to get a direction for the US dollar. Okay. Then we move to euro. Let's go to euro and we start with the weekly. Okay, so the weekly chart shows strength. Euro also tried to go lower. It couldn't. It closed above the fastest moving average, which is the 10-day moving average. And we started the week strong with on the European session and the London session. So the euro is still bullish to me, and my targets are not very far from here. I think we're heading toward 1.1950. That would be a good target for the euro USD. Okay, it's about the 4 hours. That's pretty obvious. And as I say always, the euro USD chart is basically an inverted chart of the dollar index. So because the euro is going up, and it's clear to me that it's going up, that means that the dollar index is most likely to break the range to the downside. So we might see a break below 97 points on the dollar index. Okay. Now let's move to cable, which is the GBP USD. Okay, very bullish, loving it. This trade was given like I think on the I'm not sure if it was a Monday session or a Wednesday session, but this trade was given and it's doing well. I had my entry at 1.3350, but it did not reach there, so it did not fill me. So it reached 1.3397, and then we saw the move to the upside, doing well. Let's see the daily. Daily is also doing well. It's above all moving averages, which is very bullish. A close above 1.36 would be very good for the GBP against USD. I think that's it for GBP. So, guys, let's try to guess the CPI numbers for the euro. The euro is expected technically to go up, right? So, and we have CPI numbers on Tuesday, tomorrow. We have CPI numbers, inflation numbers. If they come in higher, that would mean a higher euro against USD. If they come in lower, that could mean a drop in the euro. So either they come in line with the expectations, which is 1.9, and we see a small correction in the euro, or they come in at 2%, which is similar to previous reading, which would boost the euro USD. Why? Because it's above expectations, not because it's high inflation. Okay, so I expect the euro USD or the euro CPI to come in either higher than expected or as expected minimum. So let's see how that turns out. What also do we have? We have the USD JPY. Yes, this is a good one. Let's see the weekly. Okay, the weekly. Okay, that triggered the entry that we talked about in one of the sessions. I think it was last week, last Monday. Okay, so we're in, and we have stops above 151 and take profit around 133, which would mean a very strong drop in the USD, which of course supports our analysis on euro and the DXY and of course the GBP. The market has to connect with each other, okay? So it has to make sense. If it doesn't make sense, something is wrong, something is off with your analysis. So see how we're connected. Okay, guys, am I back? Yes, I'm back, right? Okay, guys, can you see me? We had a technical issue. Uh, can you see me? All good? Am I back? Yes, perfect. Okay. So I was saying that the market has to make sense and the analysis has to make sense and it has to be interconnected. Otherwise, your analysis, something is off with your analysis. Someone here is saying that, bro, I believe that DXY will increase in value based on my ICT concepts. Euro USD, GBP USD will fall in price to a discount levels lower. That could happen, of course. Yeah, but we're just analyzing. No one knows for a fact what's going to happen next. But as per my analysis, you saw what my argument is. So I don't use ICT or SMC or whatever that is. I use technical analysis, the proper one. I'm a certified technical analyst. I use classic technical analysis, which is the only proven analysis school in technical analysis. I'm talking, of course. Okay, so ICT is cool, SMC is cool, but I cannot use them for long-term forecasting. You can use them for day trading, fine, maybe some swings, but if you want to read further in the future, you will need classic technical analysis. Thank you, Abdillahi. Thank you, dear. Thank you. Okay, so let's move to the next one. Let's see, what do we have? So, guys, let's move to everyone's favorite, gold. Before gold, actually, let's see silver. Look what silver is doing. Man, that's skyrocketing. Wow. So, yeah, basically, my analysis on silver was the following. My next target would be 46. So we have $6 more to go. Simply because we are in an uptrend. So as simple as that. This is our uptrend. This is the speed line, which is the faster or the steeper trend line. So now the price is outside my bands and above all moving averages. Actually, they're not my bands; they're Charlie Burton's bands. But anyway, they're on my chart, so they're mine. We're above all moving averages and we're above the band, so we're still good to go. And we have an empty range to the left side, so nothing to stop silver now. I believe silver would be one of the greatest value plays of this decade. I'm expecting silver to reach 75 or maybe 78 to be specific. By 2027 maybe or 2028. Okay, that's about silver. Very simple, uptrend, very obvious. Let's now look at gold. Okay, what happened to the trade we took together? We entered here, it ranged for a bit, and now we are at, let's see, yeah, it already made 1 to 3, and we're waiting for our 1 to 5. What's it called? 1 to 5 risk reward. Now it's safe to move the stop loss here. So now we almost destroyed the. Okay, look, now the risk reward is 22, but this is not actually realistic. But if you want to look at risk reward as a dynamic thing, that it changes during your trade, yeah, you can safely say that now you have a 1 to 22 risk reward. But before that, no, you started the deal risking 1 to get 5. Now, after the deal went in your favor, you moved your stop loss, so now your new risk reward is 1 to 22, which some people would argue, but I don't care, as long as now you're risking less to make the exact same amount of money. That's also something that's a good thing in general. Okay, so that's the daily chart. Let's take a look at the weekly first. The weekly, okay, the target is at $3,600. I believe that we are breaking the all-time highs very soon, maybe today, maybe tomorrow. Depends on the liquidity today. Then let's move to 8 hours. We saw the daily chart. I have an alert here that says all-time high. Once that one goes off, that means that we have a new all-time high. It's above all moving averages. It's outside the bands. It's doing great. I think we're going to start seeing gold run after this. Okay, there might be some corrections, but I think there wouldn't be that big. Like, we might see the 450. Like, we might go back to 450, which is the 20-day moving average, but nothing more than that, I believe. Like $20 more to the downside from here, maybe, of course. That's not trading advice. And then we will start going up or back up to our target, which is 3,600. All right, I think that's it for today, guys. I'm happy to take your questions. Anyone has any questions, please shoot. Yeah, someone is asking about S&P. Let's go over it. Yeah, why not? Let's do that. I don't mind. Okay, so the S&P made a new all-time high last week because S&P 500 has Nasdaq in it, and the weight has Nasdaq. I'm sorry, I mean it has Nvidia in it. Okay, so Nvidia's weight in the S&P 500 is 5%, I believe, and 6.5 in Nasdaq 100. I'm not sure if those numbers changed. Maybe now it's more than that because in the past 16 months, Nvidia's value doubled. Okay, so I'm not sure if those numbers changed. I'm gonna check and let you know. But for now, the S&P broke all-time highs after Nvidia's earnings. That's on the weekly chart. We're above all moving averages. That's very, very bullish. But we're starting to see a slowdown in the momentum, or a slowdown in the volumes here. You see, now we had big moves to the upside and big candles. Now we're seeing them slow down. This could be just like a medium term or a short term consolidation to charge and get some liquidity to continue going up. Or maybe it's the start of a correction. So we cannot tell yet. We'll see maybe during this week. But this is an important candle, which is the engulfing candle. The engulfing candle here. Do we have a divergence? Yes, we do have a divergence. We might be looking at a correction, guys. We might have just caught the correction. Let's see. Yeah, see, we have a negative divergence. Prices are going up, but momentum is telling us otherwise. It's saying that this is empty momentum. It's not as strong. So now we have this engulfing candle. We need to see something I like to see, which is the failure swing, which is we had higher highs, higher lows, right? Now I want to see it trying to go higher than this, failing to go higher, and then breaking this low, which is the previous low. This is called a failure swing, and this is the swing level. If that happened, and I prefer to see it somewhere here. I want to see it like this, because I wanted to clear this moving average, which is the 50-day moving average. After that happens, look how long we have. Wow, we have like to almost 6,000. So we have a 300-point move on the S&P 500, which is huge for S&P. Okay, it's a very heavy pip for the S&P 500. So each pip is equals $50. Okay, not 10 like other things. So if you want to convert it to normal pips, we're talking 1,500 pips. That's huge. So let's see how this works out. Thank you for pointing out the S&P 500. I'm going to keep looking at it, and we will discuss it next week as well. Okay, let's see lower time frames. Yeah, I think it's starting to happen, but it's too early to execute or enter the trade. So I'm gonna wait for my setup to form, which is a swing setup, which is the failure swing. After that happens, I might be going in with a sell. Okay, thank you for your. Thank you so much. You're welcome. Is there any trade in live? Okay, someone is asking if is there going to be any trades today? No, today is an analysis session. We are preparing for the week. Catch us on Wednesday. We're going to have a live session, a live trading session, and I will be there. So you might see some live trading there. But today is an analysis session. That's it. Okay. Thank you. Nice engulfing candle. Fair swing is my favorite. Okay, cool. Nice. So I have a friend now who likes failure swings as well. How to enter a failure swing? Okay, so that's a good question, and let me answer that. So we're looking to sell. So after this move happens, okay, we're going to wait for another engulfing candle here. Okay, so around this area, when we get a similar what's it called, a similar setup, we're entering with 20% or 25% of the position size with stops above here. So it will look something like this. Okay, and then we move sorry, then we move the TP here. Then after it breaks the swing level, and by the way, guys, this is just for getting a better risk reward. So that's why I'm telling you enter with 20 or 25% tops of your risk or your position size. And then after this one breaks, you can enter on the break of the swing level, which is the failure swing. Your stops here and your TP is here as well. So you have a 1 to 2 on the failure swing, which is a very high probability setup, and you have a 1 to 6 almost on the 25% of the position size if you want to be risky and like jump in earlier. Because and by the way, this is not jumping too early. It's jumping early, but not too early. Because you have engulfing candles, you need to see several things. We have negative divergences. We have a daily engulfing candle. If we see a negative close for the week, that could give us another clue that it's going down. So it is going early, but not too early. So that's to answer your questions, because someone might ask me, you said before that you do not enter before you see the full setup. This is a full setup, but I wouldn't risk 100% of my position size on it, so I'd enter with 25%. Okay. All right. Okay, guys. So as always, trade responsibly and good luck this week. Trading. Be careful of the NFP. Friday is a very volatile day. Is going to be a very volatile day. I'm talking about this Friday, September 5th. Take care of yourselves and trade responsibly, and I'll catch you on the next one. See you.